For this video, I want to do a walkthrough of a sample form 8863 for education tax credits, and we're doing this for the 2023 tax year. Now for this example, we're going to be looking at the American Opportunity Tax Credit, and we are filing this for a married couple filing a joint return, and they have two children that are both in college that they're paying these tuition costs for. So we're going to be claiming one AOTC amount for one child and then a second AOTC amount for the other student. So we've got the 8863 here. It's 3 pages. So we have the page 1 of the 8863, part 3, page 2 for one student, and then we have to attach another part 3 for the second student. So we'll go through the full 8863 here, and it is part of the full 1040 for our taxpayers. So we'll go through their joint return as well. And then we do have the 1098T for one of the children, and then we've got the second 1098T for the second student. And then lastly here, just one slide covering some background on the American Opportunity Tax Credit, and then more details on the fact pattern below. So the Form 8863 we're filing can be used to claim the American Opportunity Tax Credit and or the Lifetime Learning Credit, right? So you use the same form for both. Now the AOTC is generally the more favorable credit, right? Because it's a larger credit. And it has a refundable component where the lifetime learning credit does not. Now, as far as who can claim this, it is only going to cover the first 4 years of post-secondary education. So once you've claimed the credit for 4 years per student, you can no longer claim the AOTC, but you can potentially claim the lifetime learning credit. So there's no limit on the LLTC amount. Now, the students have to be pursuing a degree, right? And you have to be enrolled at least half time. So if you've enrolled at a university and you're non-degree seeking, you're just kind of taking some classes here and there, that won't qualify for the American Opportunity Credit. Now, the maximum amount of the credit is going to be $2,500 per student, right, on the return. So if you have multiple students on one tax return, you get $2,500 per student. So for parents filing with multiple dependents, which is the example we're going to have here, you can claim that $2,500 per student. Now, in contrast, the lifetime learning tax credit does not work that way, right? It's one credit per return. Now, what are the qualified expenses? Well, the obvious one are the tuition and enrollment fees, right? So tuition paid to the university, generally that's going to be reported to you on the 1098T. But other qualified expenses include things like books and other materials that were required for the classes but not necessarily paid directly to the university, right? So those costs, as long as you have support for the payments, you can include those in the computation. Now, the total expense amount that's reported on the 8863 is capped at $4,000 per student. So if your qualified education costs are $20,000 for the student, the maximum amount that you're going to be able to report is $4,000. So as soon as you have enough expenses to exceed that $4,000 amount, well, you can kind of stop counting at that point, right? Now, what are the phase outs, right? So if your modified adjusted gross income for married filing joint return is $160,000 or less, you're going to get the full $2,500 credit per student. If you find that you're between 160 and 180, it's going to be allowed, but it's going to be reduced, right? So there's a phase out. Now, if you're married filing joint and you have $180,000 or more in adjusted gross income, none of the credit's going to be allowed at all right? None of this AOTC amount. All right, so let's have a look at the fact pattern, and then we'll take a look at the returns in the 1098Ts. So we have Jacob and Susan, taxpayer. They're married and filing a joint return, and their combined AGI is $155,375. Now, they have two children, Sarah and Adam, who are both their dependents, and they're both full-time students pursuing a degree at a Florida university. Now, Adam is in his second year in fall 2023, and Sarah started her first year of college in fall 2023. So Adam has tuition spanning spring 2023 and fall 2023. And Sarah is just for the fall of 2023. So Jacob and Susan here paid for those tuition costs. Adam's total tuition for 2023, the calendar year, was $15,900, and Sarah's was $6,500. Now, they each had additional qualified education expenses of $400 each, and those amounts aren't reported on the 1098-T. So if we have a look at the 1098-Ts here, so we'll look at Sarah's, for example, we can see line 1 here, we have the payments that were paid to and received by the university in the 2023 tax year. And then Adams, also box 1, the payments that were received during the 2023 tax year. Now, if you have payments made during the year that apply to the subsequent year, you might have box 7 check. So if you prepaid the tuition for the spring semester, the university would check this box and then it would include those amounts in box 1. Okay, so if we have a look at the 8863, well, actually, first let's start with just the 1040, page 1, to get a sense of what we have here income-wise. So we've got a married filing joint return for Jacob and Susan. We can see here that they're claiming their kids as dependents on their return, and they have checked the credit for other dependent box. So because both of these kids are over 16, right? They're 18, 19 years old in college. They don't get the child tax credit because you have to be 16 or younger in order to get the CTC, but they can still claim the other dependent credit. So we can see here they've got income, some investment income, total AGI 155,375. And so when we take a look at their page 2 of their return, the total income tax liability based on their taxable income is $18,637. So that's relevant because we have non-refundable credits here. So you have to have some tax in order to be able to offset those tax liabilities with the credits, so to be able to use them. All right, so the 8863 here, page 1 is kind of like a cover page where we do the total calculations. If you have multiple students, then you need to attach a separate part 3 for each student. So as it notes here, we want to complete a separate part 3 on page 2 for each student whom you're claiming either credit before you go to parts 1 and 2. So we'll start with the first part 3 for Sarah. So part 3, student and educational information. So we have the name of the student, her social security number, and the name, address, and EIN of the not the financial institution, the college, university, right? So the educational institution. And box 2, it asks, did the student receive a 1098-T for 2023? And yes, we did. Did the student receive a 1098-T with box 7 checked for 2022? Well, Sarah, this is her first year, so no, we don't have any 1098-Ts. And so, of course, no, there wouldn't be a box 7 checked. Now, in item 23 here, has the AOC been claimed for any 4 prior tax years? No, right? So what they want to get at this question is not have you claimed it once, twice, or 3 times, but have you claimed it 4 times in any prior year, in any prior 4 years, because if you do, you can't take it anymore, right? Remember, there's a 4 years you can claim it, 4 times you can claim it, and then you're done. Was the student enrolled at least half-time during the academic year at an eligible institution, and they're pursuing that post-secondary degree, certificate, or other program? So yes, we're a full-time student, and we are pursuing a degree. Question 25, has the student already completed the first 4 years of post-secondary education before 2023? And the answer is no, right? So we haven't already completed a college degree, right? This is the first time Sarah is entering college. And then question 26, was the student convicted of a felony for possession or distribution of a controlled substance? And in her case, no. Now, if you do have a felony conviction for these types of crimes, you can't claim the American Opportunity Tax Credit. All right, so now line 27, we enter the total qualified education expenses, but not more than $4,000. So remember, she's at 6,500 or whatever it is. So $4,000 is the maximum. So we complete the rest, 28, 29, and 30, just doing the math. So line 28, subtract 2,000 from the line above. We get 2,000, multiply by 25%, gives us $500. And so we add 2,000 plus the 500, gives us $2,500 of credit available. So the $2,500 of credit is going to be included up here on line 1. But before we get that far, we've got to do the second page for the second student. So Adam, he's a sophomore, so his second year in college. So we've got his name, his social security number, name of the educational institution, address. So yes, he did receive a 1098-T for 2023. And yes, he did receive a 1098-T for last year, right? Because 2022 fall semester was his first semester, but box 7 was not checked. So there weren't any overlap in payments that were being prepaid. Now, item 4, EIN for the university, you can find that on the 1098-T. And so similar questions down here for Adam, same as Sarah's, right? So has the AOC been claimed for any 4 prior years? Well, we did claim it last year, but we haven't claimed it 4 times, right? So this is the second time we're claiming it, so we're still answering no. We have not claimed it 4 total times. He was enrolled half-time pursuing a degree. He has not already completed a 4-year post-secondary education. And no, he is also not have a felony conviction for possession or distribution of controlled substances. Okay, so the AOC computation, same as for Sarah, right? Adam's tuition was close to $16,000, so we're using the $4,000 as the cap. So we have the same $2,000 figure times 25% gives us $500, and the total for Adam is going to be $2,500. Now, once we have the $2,500 for each student, we can add the total and put it up here on line 1. So we've got $5,000 of available refundable American Opportunity Tax Credit. So lines 2 through 5 is where we figure out whether we can claim this based on our AGI or there's any phase outs which require a reduction. So we have the amount of our AGI from page 1, $155,375. The subtract line 3 from line 2, we get $24,625. $20,000 is the threshold for married filing joint. If you're single or head of house or surviving spouse, you can put 10. So we enter $20,000, and line 6 asks us to do the following tests, right? So if line 4 is equal to or more than 5, enter 1 on line 6, right? And so that's what's happened here. Line 4 is greater than the amount on line 5, and so we're going to use 1. What this calculation is doing is showing us that we're going to be able to get the full benefit of all the credit. If our income was over $160,000, line 4 would be less, and so we would have an amount here less than 1.0, and that would cause a reduction in the amount of credit available. But in this case, their modified AGI is under $160,000 for married filing joint, so it means there's no phase out here for the American Opportunity Credit. So we might multiply line 1 by line 6, so we get the $5,000 amount. So the refundable portion of the credit is $5,000 times 40%. Gives us $2,000. So the $2,000 is reported on page 2 of the 1040, line 29. So there's the first part of the American Opportunity Credit. This is the refundable portion. What this means is that even if our tax was 0 up here, because it was completely eliminated based on other credits, we would still get the $2,000 refund, because that's the refundable portion. Now in our case, we're not done yet with the computation because there's potentially a non-refundable education credit. So in part 2, line 9, we subtract line 8 from line 7, and that gives us the $3,000 remaining. Now we have to take the $3,000 and go to the credit limit worksheet to figure out whether we have enough tax to be able to claim this non-refundable credit. And so if we look at our credit limit worksheet here, the amount of tax from line 18 of the page 1040 was $18,637. So with the $18,637 and no lifetime learning credits being applied for, we've got the $3,000 amount remaining from Form 8863 line 9. And so we subtract line 9 from line 8, and it gives us available tax of $18,637. And so on line 12 of this worksheet, it asks us to enter the smaller of line 10 or line 11, the smaller amount being the $3,000. So we have the $3,000 non-refundable American Opportunity Credit. And on line 13, the worksheet directs us to add lines 9 and 12 and enter this amount on the 8863 line 19. So the $3,000 goes back to the 8863 line 19 at the bottom here. So line 19 is the non-refundable education credit. Enter this amount from line 7 of the worksheet, right? We've already done that. And then also enter it on Schedule 3, Form 1040, line 3. So if we go to Schedule 3 of our return for additional credits and payments, we can see here, Part 1, line 3, education tax credits from Form 8863, line 19, $3,000. So the $3,000 flowing through from Schedule 3 is reported up here on line 20. So that is a credit against our tax liability up here on line 18. So we can see here that they've also got the other dependent credits from 8812, but there, more importantly, that's the piece of the American Opportunity Tax Credit that's non-refundable. So in this example, these taxpayers were able to get the full benefit of all the American Opportunity Credit, right? They had $3,000 of non-refundable credit up here that's being used, and then they've got the $2,000 of refundable American Opportunity Credit down here on line 29. So they've got the full $5,000, right? They got the $2,500 for each student, so they got the full benefit of the AOTC. All right, so that covers it for this video. Hope that was helpful. If you have any questions, please feel free to leave a comment below, and I look forward to seeing you again on the next video. Thank you.